Firstly, I want to thank you all for being here today. This is the first webinar of Beicip-Franlab's Expert Talk, and I'm happy to be hosting it. And we have a special guest today, which is Pierre-Yves Chenet. So Dr. Chenet is the Chief Technology Officer and the Petroleum System Analyst Expert at Beicip-Franlab. And today he'll be taking us through oil and gas asset evaluation in today's economic environment. Hello, Pierre-Yves, and I'm glad to have you today with me on this webinar.
Okay, hello all. Thank you for attending. Thank you, Nicolas.
So just to give you a first brief overview on Pierre-Yves, so I'll give you a small biography for the people who don't know Pierre-Yves. So Pierre-Yves Chenet is the Chief Technology Officer for Exploration and EOR in Beicip-Franlab. He has more than 35 years of experience, and he holds a PhD in Earth Sciences from Paris School of Mines. Dr. Chenet has been part of the French Institute of Petroleum since 1981, and for those of you who have been following his work, he was a research engineer and then later specialized in expertise in Petroleum Systems Assessment. And for the last 10 years, he has been working on a very, very wide assessment of producing and exploration portfolios by evaluating and risking prospects and also exploration blocks, and recommending growth opportunities in producing assets for major NOCs and IOCs. So just to introduce myself also quickly, I'm Nicolas Hawi. I'm a project manager and senior petroleum system analyst at Beicip-Franlab, and I'm happy to be here discussing with you today this interesting topic. So firstly, just some meeting guidelines for all of you. As you can see, we have 4 main guidelines. All of you are automatically muted. If you have any questions, don't hesitate. There's the toggle question in the webinar session that you can write. Pierre-Yves will be answering all your questions at the end of the presentation. And then we also might ask you to answer some questions related to a poll panel and see if you guys were really satisfied with the presentation. And then finally, this webinar is recorded and will be set on YouTube. So don't worry, everything is on our YouTube channel. Don't hesitate to follow us. It's Beicip-Franlab. And let's kick off the webinar, Pierre-Yves.
Okay, thank you, Nicolas. Nice to meet you all. Good morning and good afternoon. The purpose today is to review the current status of petroleum assets given the current situation. I'll elaborate on the standards that are used to evaluate assets, the PRMS, and above all, how we can evaluate undiscovered volumes in place and turn them into proven reserves, as well as the impact and importance of development plans. So I'll elaborate a few solutions that we have been we are offering in a variety of situations when it comes to dealing with petroleum assets, typically selling or buying shares in the field or acreage by an independent, revisiting a large international portfolio of opportunities, looking for new opportunities in a low price market, and ultimately how to promote growth opportunities. And all this is based on the knowledge, the experience, and the technology we have access to. So just in one slide, I'm going to show you some facts about where we are in the current situation. The slide is showing the evolution of discoveries made each year since 1 century, the production, and various estimates about the production forecast and estimates by renowned specialists from Total for the future. What you can clearly see is that after 1985, the production is higher than the discovery rate, and therefore we still benefit from the excess of discoveries made before, but the situation is not evolving on the good way. We will need to develop new reserve, whatever the drop in the consumption. So today we have a small drop of consumption, but which can be considered by everyone as temporary, and there'll be a recovery, so that we'll stay with the same type of consumption, and therefore we need to find new reserves. So regarding assets, I think first definition has to be made. An asset can be a play or prospect, a discovery, a potentiality of development, could be a field under development, or a producing field. This is the typical value chain from exploration to production. So when we speak about growth opportunity, we speak about monetizing and evaluating assets under different stage in the exploration and production value chain. Regarding the valuation, we need a common definition and common standards on how to evaluate these assets, whatever on the early exploration or in the late production stage. And many institutions have been working on the matter, and they came up with the Petroleum Resource Management System framework, where basically most of the professional groups, such as APG, SEC, SEG, SPE, have agreed about common definition. And what they say is quite important. It always associates a project to an in-place accumulation to estimate recoverable resources. The company has a certain share and technically has a right to recover some resources which are eventually located into the reservoir in place, but they can be recovered because there is a project, either conceptual, but there is a project. No project, no resources. One important aspect is I will interrupt a few seconds because I don't think I have taken the right slide package. This is going to take 1 second. Excuse me. And that's this one. Okay, that's okay. Where from the PRMS standpoint, a given volume of hydrocarbon can be classified as undiscovered in place, then prospective resources. That means that we have some recovery taking place. Then once it's discovered, there are contingent resources. That means that the development is not yet fully defined, but at least we have a project attached to these the development plans, and ultimately when the development is approved or is on production, we are dealing with what we call reserves. Interestingly, the bankers, they focus on the almost certain reserve, they call this proved reserved, whereas the E&P is dealing with the entire namings of all this type of definition and classification. Importantly, when you compare the estimates on proven reserves on one hand, and maybe the optimistic estimate of prospective resources, the difference between both is that one is not really accounting for the geological risk, whereas the other one has accounted for the geological risk and the economic risk. The ratio between the 1P number and this high estimate may be 1 to 20 or even 1 to 50. So if we want to incorporate reserve, we have to identify much more prospective resources. Similar situation, of course, happens when we deal with undiscovered petroleum in place, but we suspect that it could be there. The ratio between undiscovered petroleum in place and the proven reserve may be as low as 1 to 100. In other words, if you have estimated 10 billion barrels prospective resources in place, it may only lead to 30 to 100 million barrels reserves. As a consequence as well, you need to identify significant numbers on this undiscovered petroleum in place to hope for a viable and economically viable reserve, even with a much smaller number. So there is no contradiction between speaking about billion barrels in place and speaking about hundreds of millions or tens of millions of proven reserve. That's compatible because there is the recovery factor effect, the geological risk effect, and the economic risk effect. So regarding growth opportunities, when we are asked to make this type of evaluation, our customers, what they are looking for are three things. First, something which is technically reliable. So the volumes that we are talking about have to be properly assessed. It has to be independent. We have sometimes pressure to be biased, but we have to remain independent. And of course, we want to give them the highest value for the price they're ready to, or the expense they're ready to make using our services. We have solutions, which I would summarize in 3 words. Knowledge. We cover all key specialties into reserves, resource evaluation, G&G, reservoir. We have experience. We have been there for the last 60 years. And if I do the same exercise as my colleagues from the Anglo-Saxon world, it could exceed 1,500 years of experience, which is not small. And regarding technology, we have our own advanced software for petroleum systems, seismic, and reservoir engineering. And we always use the most advanced available solution on the market. During these past 60 years, we have built a knowledge database. So it's not a database where you would find terabytes or petabytes of seismic data or uninterpreted logs. No, it's knowledge. So in that knowledge database, we have summarized current reserves and current production data on almost all the basins of the world which have a certain interest when it comes to petroleum potential. We have also made a quantitative assessment on the plays in all these basins. When I say quantitative, I'll elaborate further. That means that we are not that interested whether the reservoir is carbonate or sandstone, even though we have taken note of it. We are interested in its porous thickness, the volume from which you can extract petroleum. Similarly, for charge, we are interested in how many million barrels oil equivalent we can charge per square kilometer. That's the important point. Not the fact that we have a nice type X source rock, which were deposited into a very complex environment, even though we take care of that as well. Also have made estimates on the biggest discoveries yet to be made in the 250 worth exploring basin. And since we know that we are dealing with future projects, we have analyzed the exploration status, the time to first oil, and the economic conditions, so we can readily have a summary of a basin very rapidly. Not that many numbers, but key numbers. And typically, it's a graphic information system. You click on a basin and it pops up with some data on the petroleum system, the reserves, etc., etc. on the experience, on the numbers to characterize a typical conceptual field development plan. We can count on the experience on more than 1,000 fields, typical production curve, and we systematically do economic evaluation. So finally, before going into some examples, the technology, as you can see, it's quite rich, many slides, many examples, but it tends to cover all the aspects that are to be dealt with when it comes to evaluating an asset. I call this many views of the same reality. We never know exactly the reality, but if we look at it from different angles, like for instance, modeling and seismic, which are complementary but different standpoint, or a process-based versus pure statistics, it gives us a better view of what's going on. So I'm not discussing that much typical basins. I think we'll plan new webinars in the near future to discuss how a basin compares to other ones. I'm just discussing cases where someone wants our help. Typically, we have an independent company which wants to sell or buy shares into a discovery or a field or an acreage. So they want what they call a competent person report or a second opinion. The company is financially driven. It's made of a small group of smart technical experts. They have experience in operating groups, but they need an external advice which they can trust and which eventually will validate their initial interpretation. So then a project to make a CPR doesn't last long. It's only a few days. Typically, you want to farm in a mature field where there are 4 producing wells. And we'll team a reservoir expert and a GHG expert with a lot of experience. We'll look at the data room. We'll make make our competent person report, look at the volumes in place, the reserves in the PRMS sense, and the potential incremental reserves with specific activities, like for instance, recompletion, side tracks, or deeper penetration. And we just deliver a 20 slides summary presentation. The second case is the company wants a second opinion. So at some point, this is a certification, or let's call it due diligence. You have a potential farming into a mature field. There are 4 fields and there are total 4 producing wells. Then we have to join a bigger team with typically 1 reservoir expert, 1 senior, 1 geologist, 1 geophysicist, 1 petroleum architect, and 1 petroleum economist. And what we will be doing is in-place estimate, low, best, high values, reserves estimate, but then we will look more carefully at the historical production, the estimation of future production profile, which will help us ultimately to define the proven, probable, and possible reserves. We'll elaborate a conceptual development and making cost estimate and make an economic evaluation, doing some fiscal and contract modeling. And we provide an evaluation of reserves, a report on evaluation of reserves. 4 weeks. Now, let's take a quite different example from a major oil company. This major oil company is revisiting its international acreage. It has been heavily investing into acreage worldwide. They eventually invested in discoveries or some producing assets. But because of the downturn, maybe the investment was made in 2013 or 14, they want to refocus on a reduced portfolio with less risky acreage, valuable discoveries, and production assets with minimal daily production. And they want it fast. So they want a fast ranking and they want a good, trustable recommendation. So we can do that. This takes about 2 and 4 months, and this really depends on how many assets we have to deal with. Typically 10 fields, 5 discoveries, 20 exploration blocks with about 100 leads, and this in 6 different countries. Then we can join a team of, again, the reservoirs, the geologist, geophysicist, the architect, and the petroleum economist. We'll do a data review of all the company's estimates on all these assets. We'll look at the evaluation of prospective resources and geological risk. We'll make the classical workflow and reserve estimate, and we'll ultimately deliver a ranking by net present value, economic sense, and the expected monetary value versus rate of return, and make recommendation based on that. So we not only look at the geology nor the production, we look at the final numbers. That is how much this project from the PRMS standpoint is profitable. So the workflow we use for that. First, since we have our worldwide knowledge, we'll review their place according to our knowledge. Locally, we may review the petroleum system efficiency through 2D basin modeling. 2D basin modeling is smart because it really gives a clue on not only the hydrocarbon kitchen, but also the reservoir distribution, the charge system, and the system that makes that a lead somewhere has a real chance to be properly charged and have the significant storage capacity, and the sealing efficiency is preserved. After that, we built a lead portfolio accounting for the areal extent of the lead, the reservoir thickness, the closure, the net true gross, hydrocarbon in place, thermodynamics of the fluids, and then ultimately calculate oil in place and gas in place, and geological risk. I'll come on this geological risk matter after. For discoveries, since we know it's there, we have to review the reservoir model, and if there is no real ones, look at the conceptual field development plan and production forecast, and focus on the net present value, rate of return, and expected monetary value. And for production, we review the production forecast. So at this stage, we are not going to use all the technology there, but we may have to use part of it punctually to solve a question about, for instance, a certain lead into a certain area. Regarding the lead ranking, we think that what defines the geological risk is always the weakest component of the 4 elements, like the trap quality, the hydrocarbon charge, the reservoir quality and presence, and the seal quality of presence. So we use these 4 elements and give them probability and range from 1 to 5 typically, and then we rank this prospect by prospect. So in prospect 1, for instance, PA may correspond to charge, but in prospect 2, PA may correspond to reservoir quality. So, but the thing is that it's the weakest, and we can then rank the prospects semi-quantitatively, and it's obvious that the change of geological success are going to increase when all the grades characterizing these 4 components are the highest. After having done that, we can transfer this semi-quantitative risk scale and ranking into actual probability of geological success, and make typical graphs where we compare the probability of geological success or chance of geological success and the undiscovered volumes, which we consider as unrisk. And obviously, we still look for the highest undiscovered volume with the highest probability of success. And we push this forward using the production profiles and the basic cost estimate to rank the leads or discoveries by, this is the net present value on the x-axis, and this would be the rate of return on the y-axis. At this time, we can take into account the geological risk when it comes to prospects, or the cost, the minimal NPV return that we consider as being economically viable. And we define, of course, we look for the highest NPV versus the highest rate of return. So regarding the developed assets, if we have to deal with 6 or 7 assets, we provide decline curve analysis, and we can compare the various assets between them. And if we define a certain threshold of daily production, for instance, we can define which assets pass the test or which are below that test, and also provide then a ranking. So I've been dealing with the company, trying to right-size its assets. Because of the current situation, there probably are the companies that are chasing new opportunities because they want to take advantage of new opportunities. They expect attractive deals due to this low price environment. So for this company, we first talk with them and define their own criteria. If they want for us to go everywhere, we can do, but usually they focus on certain areas, or they say everything but a certain list. And they want to have a balanced portfolio between exploration and new venture, or in proven provinces, and they want some shares in discoveries. They want a regional view on selected province, or more detailed view in a proven province, and a reliable economic chance of success evaluation. So this can take, and this depends on the how many basins we have to scrutinize in more detail. We can screen, of course, the entire ones, but if they want us to focus on, say, 30 basins, it's obvious that it's going to take longer. And typically, this could take between 3 and 6 months. The objective will be to provide a regional exploration risk assessment through play-based assessment, detection of opportunities for further bid participation, and firm recommendations on the most attractive opportunities, of course, taking into account the cash flow, which is available, made available by the company. And for this, we constitute always this multidisciplinary team with reservoir geologists, geophysicists, petroleum architect, and explorationist. So what we do is then a pre-selection through screening of many basins, play-based assessments on selected basin, then identify leads and ranking them in selected basins, and provide resource estimates and reserves review by, as usual, looking at historical production. And last but not least, what are the prices to buy, to enter, to farm in an opportunity? So this is an example. This is the only one where I will name a country, which is currently Kenya, for which we are working these days. And when we say play-based assessment, we provide what we call CCRS maps per play with a risk and uncertainty matrix assessment, and come up with what we call exploration potential provinces by geological or petroleum system similarities, comparing the high potential to moderate and lower potential, taking into account the confidence in the interpretation. It's obvious that when we have little data, we cannot be that confident in our interpretation. And well, in that case, we were asked to make a first semi-quantitative ranking. So, and we can do this for any basins which we are required, even with a limited amount of data. I spoke about quantitative risking of petroleum system elements, trap, reservoir, seal, and hydrocarbon charge. And this is a typical grade that we use from 1 to 5, high being low grade and 5 being the highest. And we can attach to these grades a, let's say, chance of success Typically, porous thickness of reservoir of less than 1 meter are considered as not really able to store significant amount of hydrocarbons, whereas in the highest ranked, it's more than 20 meters porous thickness. Same with hydrocarbon charge, where we can estimate the amount generated into a given kitchen, expressed in million barrels oil equivalent per square kilometer. Same for the seal, which is a certain thickness of high capillary pressure units. Also the trap size, offshore and onshore, depending, which are not the same criteria. It's obvious that in the offshore, to have a chance to have an economic success, you have to have a much higher volume in place than in onshore. And this is just directly taken care of into that grading system. Ultimately, after selecting the opportunities, well, this is a view of map where we have discoveries of oil or gas or prospects or less certain things which are leads. We calculate the net present value, the rate of return when it comes to undrilled prospect, the expected monetary value, the net present value per barrel, how much the government of the country where you will be exploring is going to take, and estimate that the net present value of the contractor, the type of opportunities, producing field, discovery, leads, and so on and so on. So we have a common way to compare the assets, whatever the stage in the exploration. When it comes to economics, we can do a further refinement by playing multi-economic scenarios, accounting for uncertainties on the oil and gas price. That's one thing, or the reserves, or the volumes in place, recovery factor, and so on and so on. All this is wide so that we can immediately generate such profile in a small amount of time. And as I said last, when you enter into a transaction, into an acreage or a discovery or a production, you have to define first the expected reserves and the dollar per barrel oil equivalent reserves you are purchasing. I cannot elaborate on the basins. This is proprietary information. But you can see very variable situation from typically $1, $3, and in some cases, a very high price in apparently highly profitable areas. So this is taken care of at the time of looking at the opportunities. So I'm now going to discuss the last situation, which is more on the government side or ministry, energy ministry sides. They want to promote acreage for coming bid rounds. What they want are independent assessment of prospective resources. And depending on the situation, they want just a partial or total review of the geology and geophysics. They want a state-of-the-art volumetric evaluation. They want to produce exploration opportunity maps, exploration block ranking, leads and prospect ranking, and this may happen up to the producing field as well. So it's exactly the same approach. They want to publish part of the of all the information gained, and they want us to make a promotion material in the form of a graphic information system, an ArcGIS database typically, and associated with an atlas. So how long it takes to make such review, this depends on the level of review they are expecting from us. Typically 6 to 9 months. We provide advanced play-based assessment, blank ranking, eventually redesign sometimes, and prospective resource assessment. And typically we have a team of 4 or sometimes 5 explorationists, geologists, geophysicists. What we do is redefine the place, including petroleum assessment risk maps, advanced geological modeling, lead identification, and resource estimates, and deliver an atlas covering these aspects. This could be done with the producing field as well. So the workflow then is to put into advance geological modeling. Geological modeling in something which was not really used until maybe 20 years. 20 years ago, Petroleum System people like me had more and more opportunities to work because people realized that hydrocarbon charge was a key element. This is one of 4 elements. But now we are capable of simulating reservoir distribution, reservoir quality, seal distribution, organic matter distribution. You have heard, like me, so many times, we don't know where the source rock exactly is, and we have no idea if the TOC we measure in this place, in that well, can be applied in the sink line or the trough nearby. Now we have a solution for that. So the geological modeling, a model makes sense as long as it is calibrated. And for that, we always provide models which fits within the uncertainties, the observation that we have. And we integrate these models results with all the exploration data, typically seismic attributes versus process-based simulation of reservoir presence, or I would say DHIs, direct hydrocarbon indication, seen on the seismic with the basin modeling predicting some separation somewhere, and so on. So, and I will, to some extent, conclude the presentation with that. In that case, with the models, we have the advantage of providing complete integrated view of all discoveries and leads in a given area, and then make an assessment of the potential in terms of distribution of volumes in place versus probability of geological success, and then estimates the best P50, P90, and P10. Just a comment on these 2 curves. The first one shows the uncertainty of the determination of the volumes. The second one may be interpreted in 2 ways. Is it the chance to find at least a certain number, or is it, what is the probability of success I should consider? 90% chance, well, 25% chance to find, let's say 10 billion barrels in that case, or 10% chance to find 30? There are 2 different approaches. The first one is to say, I have a lead somewhere, and I'm expecting to find an accumulation, which is characterized by a low, best, high estimates on the prospective resources. And it's, I can say, I have a 30% chance to find this accumulation with that uncertainty. It's quite good for characterizing lead and prospects. It basically differentiates the risk, which is I will have a success or failure to find that distribution. That means that if we have success, whether I'm here in the lower end or the higher end, I'm still with the same probability. The other way is to say, what are the chances to find at least a certain volume? The higher the volume, obviously, the lower the chance. And if the chance to find at least 1 barrel over 10,000 square kilometers will be nearly 1. But we have this detail risk versus volumes assessment to make. It's more recommended when we have several leads, chance to find nearly all of them, and it's recommended for characterizing a lot of prospects, leads, or a play. People sometimes mix uncertainty and risk. To me, there are 2 different things. The risk is what's going on if I drill, or yes or no, or if I implement a new well in a field that will produce more than X barrel per day. It's a yes or a no. This is the risk. The uncertainty is, I don't know how much I will find, but if I find, I should find in between this and that number. So when it comes to deal with several leads, first, we try to reduce the chance of success to the minimum number of independent factors, typically the 4-1 reservoir, charge, sealed, and traps, and we'll define probability of success as a product of these 4 independent parameters. It should be driven by the expected absolute volume, typically the chance that the reservoir thickness has is enough thick to find a certain volume of gas, for instance, in TCF. 50% chance of reservoir thickness above that 20 meters. This is the way I should define the probability of success. And second, there is a dependency. If a lead in a play gives, when it's drilled as a prospect, is positive, then of course it increases the chance of success of the other one. So in other words, the risk is not a fixed number, it's a number which reflects our knowledge at a certain time. Just to make an example of a risk tree, which could be quite complex when we have many leads. Let's say we have 3 prospects, A, B, and C. You define a chance of success for A as, say, 20% chance. You to find yes, 100, say, million barrels or 0. And then for prospect B, if A is found, then B has a higher chance of success. By itself, we give it a lower probability of success. So this decision risk tree will come up with situation where all 3 prospects are positive, all 3 are negative, and in between situation, which will define the probability to find at least certain number, exactly the case I was showing before. So this is different from just adding, multiplying volumes unrisked by local risk. This is the unrisked volume approach, which may work at some point, but it may not be fully adapted to fully evaluate the economic value of a given asset. So thank you for listening. Now, many questions to answer. As I would conclude, there are growth opportunities because there is a need to find resources up to the next 30 years. We need a global approach to evaluate these opportunities with always a final view on the economic asset. And the knowledge of the petroleum basins and producing fields pushes toward a process or model-based analysis rather than pure statistics and correlation, like creaming curves, statistics on discovery, which is fine, but to us is not enough. As some Nobel Prize was to say, you can see some correspondence between discoveries and certain presence, but it doesn't mean that this is the cause. We want to understand what's going on. So we know that uncertainties and risks will always remain, but the ranking and process modeling will really help in making the right choice.
Pierre-Yves, thank you very, very much for this presentation. Guys, I've put a poll. Please, if you can answer to the poll, it would be great. And we will kick off the many questions. And I know this is a subject which is can span on hours and hours of discussion. But I will begin with my first question from Johannes van der Boer from Total. So he has 2 main questions. The first, or a bit more than 2. You can check them, Pierre-Yves, on your question if you want to read them again.
So Johannes, hello, Johannes. What is our method to determine yet to find? How does it compare with the method of USGS? Well, the method of USGS is, as far as I remember, based on statistics, based on the extrapolation of discoveries, trends. Ours, for the yet to find, if I speak about the maximum discovery yet to be expected into a given basin, is based on the characteristic of the I would say, higher quality leads whose parameters for reservoir, trap size, hydrocarbon charge, and seal efficiencies are on the high end. Typically, if I have a Brazil type lead in the pre-salt, where reservoir can porous thickness can be as thick as 50 meters, 500 meters at 300 meters with 20% porosity typically. You know that you have a good charge. The seal is no problem. There is salt, and the traps are very big. Then you will find that the expected size of the discoveries will be much higher than in another basin where you never saw, and there is no reason to expect more than 5 meters reservoir porous thickness and so on. So we are not calculating cumulative YTF on the global basin for all the basins. We are just calculating what would be the biggest discovery that you could make in that particular basin.
So the second question also from Johannes is, what is the effect of unconventionals on production curve? And what's the effect of consumption on production? For example, the OPEC cuts, the increased electrification of transport.
Well, this is a little bit beyond my presentation, but we can make a simple calculation. The unconventional represent, let's say, 5 million barrels equivalent per day. That means about 1.5 or 2 billion barrels per year. And if we go to our curve, the initial curve that we had, so that has an impact on the, say, at the most 2 or 3 million. So it's not going, it's going to slightly change the trend, like the current, this current pandemic that we have, which is going to take from us maybe 2 billion barrels oil equivalent discoveries. So we live today thanks to what we discovered 50 years ago, or even more, in terms of consumption.
So we have also another question from Mr. Muhammad from Geostock. So it's a comment and a question. So probably the needs are different. So the workflow and the deliverables that that we propose for asset valuation can be different between a national company or a major oil company. Or have you seen trends, Pierre-Yves, on the offers that we propose?
On the workflow between national oil companies or international oil companies?
Even the expectations are clearly, some of them are clearly different, and maybe the time frame or the timelines are shorter, I would say, for IOCs and maybe a bit longer for NOCs. Yes,
the answer is yes. I would say IOCs, they want the fastest first oil. So the effect of discount on prices is less important, whereas national oil company have a longer term view. So even if it takes 10 or even 20 years to go to for this first oil, they are going to evaluate their assets, accounting for the fact that it's going to produce within 10 or 20 years, and under probably certain different economic conditions. But they see this as more long-term strategy. And ultimately, I think they complement each other. We need to have long-term strategy in which the national oil company know that their assets is key for the development of their country. And they have to maintain and forecast as far as they can in time how these assets are going to evolve. So even if the price of oil is dropping for 6 months, it has little impact on their long-term strategy. And this is good, because this is the only way to manage properly the future. It's a care and detailed assessment of what is going to be produced maybe in 10 or even 20 years.
So in terms of projects, Pierre-Yves, you feel that maybe national oil companies, even though we are living the situation of Corona and a reduction maybe in demand at this point, they are still looking at a longer time frame in their expanding their portfolios, for example. So the shock will be less felt on a shorter term on national oil companies.
Yes, there are two different situations. There are national oil, as far as I know, there are national oil companies where main assets are fields or acreage in their country, and they have a limited international exposure. Therefore, in the international exposure, they would be affected by sudden price change. In their own place, it's a temporary decrease of the cash. It has an impact on the budget, but within 10 or 20 years, they will still be a key element for the development of the country and future transition to new form of energies.
Okay, so we have another question from Mr. Shushma Rawat, Chief General Manager at ONGC. How would you differentiate the play chance success from the POS of a smaller acreage or block coming up for bidding with the little initial information that is usually available?
Okay, sometimes we use this approach. We have what we call play element chances of success, which by definitions cover the hydrocarbon charge regionally, the reservoir quality regionally, and the seal regionally, with the numbers that change according to the CCRS maps that we can build. And locally, the probability of success, which includes the local condition of reservoir, local traps, etc., etc. Sometimes in that case, the probability of success for the lead are dependent from the play probability. They can be, so the conditional probability, for instance, for the seal may be 1 in the prospect, knowing that the probability of success in the play is 0.5, for instance. So what we do when it comes to considering the play, having these risk maps for the various petroleum system elements, we are able to say you may have a huge trap somewhere, but there is no way, or the chance to have a charge are so small because there is no source rock, or it's immature, whatever, what has been eroded, or timing is not good. Then you will see it on the portfolio in our XY graph, where you have very low probability of success for a very big volume. Then if you multiply both, it's not because you have 1% chance to find 100 billion barrels that you will effectively get 1 billion barrel. So, and to us, there are criteria on probability of success below which you have to discard the prospect, because there is really no reason to have it, that the discovery, any discovery significant will be made.
Perfect. So I'll take the last maybe 3 to 4 questions. Okay, Mr. Sandeep Bhattacharya, can you elaborate on the POGS? I think we discussed it. I don't know, Pierre-Yves, if you want to elaborate any more on the POGS approach, or maybe we can get in contact with you if you want more information from ONG.
Yeah, well, the POGS approach, of course, is quite, well, I would need maybe half a day training.
So maybe we
seminar on that. But what I'm going to say is that it's different from an exploration perspective. For instance, we have always to think in terms of drilling program. You don't want to drill 100 wells to have a statistical distribution of your chance of success. You want to have maybe 2 or 3 exploration wells, let's say 5 in a campaign, and say you bet on this 5, and it's 1-0 every time. So Based on that, what you want is to have the best idea of the chance to find something which is a given uncertainty, rather than use this complex chance to find certain volumes when we have multiple plays. So the intermediate situation is the one I'm describing here, where we have 3, 4, up to 5 prospects. And then you have a rather reliable chance of success distribution, which ultimately help you in ranking the monetary value of your exploration campaign. But we can have a special workshop on that.
So also maybe 2 questions from Mr. Hamad from Geostock. So do you include the break-even price and economic evaluation? Definitely, I think.
Yes, yeah, of course. Well, yeah, automatically we can define, we want the net present value being above whatever number. It automatically calculates what is the cost of, average cost of drilling, or what is the minimum oil or gas price that should be to make it economical. We do all this sensitivity analysis.
Yeah, and then the second
point is that, yeah, just one point is that we are able to process hundreds of documented discovery leads in prospects with the reduced numbers and making scenarios in a matter of minutes.
Okay, so the second comment was the ranking of basin as well as prospects within the basin is an important tool to determine appropriate strategies for exploration, licensing, investment, and that is what is BP recommending in its workflow. So, of course, it's all about integration, and I think Pierre-Yves showed you today how wide can you have different types of perspective for different types of basins, but also from different types of assets and different types of companies. So it's an integrated process, yes. A question from CAPEX, Mr. Jose Maria Gonzalez. What is your opinion or analysis regarding today's status and post-pandemia about which strategy the company will focus their investments in terms of oil and gas projects?
Well, the strategy of the companies?
Yeah, to invest or where to focus their investments in terms of oil and gas projects.
Well, I think they will. I think they all have their internal projection of the average consumption, and then based on that, define what is the maximum level of capex given their internal, well, the return on investment they will have, which means that they have their own criteria on the minimum risk on well, return on investments they want. They are driven. They are driven by
this
that.
This is very dependent on their internal structure.
Yeah, but we can say safely that big oil companies, major oil companies, are still making development plans that where the first oil will come after 10 years, even in not so easy environment. In other words, in deep water, there will be still investment, but this will be focusing on big traps or big targets. When I say big, when it comes to gas, I think a threshold of 4 or 5 TCF in place is the minimum. And then when it comes to volumes in place in oil equivalent, this is probably closer to 1 billion barrels in place as a minimum for deep water, I mean.
Perfect. So we have a question also from Beicip-Franlab Asia, Mr. Mohamed Shafi. Quickly, what kind of resource assessment methodology usually is used for block promotion activities?
What is the
resource assessment methodology that is usually used for block promotion activities?
Well, the resource assessment for block promotion has to be seen as the most reliable and the most, I would say, the best, where it shows the best integration and exhaustive examination of all the data and parameters to provide a consistent interpretation and consistent models model consistent with the observation.
And then
so this normally makes the industry, which is ready to invest or is looking at opportunities, that because of the reliability of the assessment, they can make a good decision. And this is where the resource assessment has to be exhaustive and independent. Not all areas are good for exploration when it comes to exploration. And there are areas which are less blessed by Mother Nature, and so the charge is not there, or there's no reservoir. This happens. But if you honestly provide an exhausting picture of that, that really helps in the investors to make decision, because they have a good reference to count with.
Thank you. So also a question from Mr. Igor Bagno. Dear Pierre, thank you very much for the presentation. Question: do you see the decline in demand in asset evaluation and due diligence services since March this year, or is there any change in the trend or increase of interest? Thank you.
Okay, so this is March now. I can say that I have seen an increase. We are detecting an increase in asset evaluation for the various situations I've been describing. Some chase opportunities, other want to right-size their portfolio, some other wants to attract investor because they feel a bit short, but they have good reasons to, this might be a good deal for them and for the buyer. And governments, we have seen that. We've seen increase in assessment and regional resource assessment and acreage promotion as well.
Another question from Mr. Srivadan from ONGC Videsh about the future of gas and gas project. How do you project it? Maybe we're asking you too much today, Pierre, but we're using this chance to have you with us.
Okay, the future of
gas projects and gas, gas and
oil and gas project. The future.
Gas mainly.
The gas. Gas is. I would say that even though the gas price is very, very low, there will be gas project because what is affected in the consumption today, well, kerosene in plane, maybe less gasoline in cars, but for heating, same needs. For electricity from gas generation, same thing. So I think gas project so far have a future which goes way beyond 2050 to 2050.
Okay. And the last question.
I'm not a guru in that, but common sense would say gas, because of the climate change and transitional energy, will stay for much longer than significant dependence on liquids. So
the last question, but not the least, from Moussaï Khademi, for sensitivity analysis, do you reckon an increase in production still can be considered a considerable component to higher NPV as per current situation?
For the, you mean a higher production would lead to a higher NPV?
Yes, an increase in production still can be considered as a considerable component to higher NPV. So higher production, higher NPV.
Yes, well, this depends on the overall CapEx and OpEx structure, but at least this can be readily analyzed. If we change the production by, say, 10%, increase, then this means if the OpEx are the same and the CapEx have been already spent, this might be still profitable. This really depends on the case, but at least we have everything we need to rapidly test that hypothesis.
So thank you very much, Pierre-Yves. Thank you everyone for attending. I think you put a very nice framework to the different types of webinars that you are going to launch in the next weeks and months to come. They will be more focused, of course, so we can tackle every subject in much more detail. I strongly advise you to follow us up on YouTube, on LinkedIn, and also maybe to answer on the poll that we've set to you, just to have your feedback on the presentation. Thank you all for attending this hour presentation, and hopefully we can see you soon. Take care, stay safe, and back to work.
Okay, well, thank you all, and looking forward to meeting you again soon.